We've got a strong balance sheet with lots of solvency headroom, which provides capacity to do M&A. We can fund, we believe, M&A up to about 200 million plus immediately off our own balance sheet.
Hello, you're watching Proactive. I'm joined by Chesnara CEO Steve Murray. Steve, great to speak with you this morning. You're up to your half-year report and again showing very strong cash generation for the period. Take us through some of the financial highlights of the period.
Yeah, I think you're right to call that out, Stephen, and thanks for having me on this morning. So it has been strong cash generation in the period, up from last year. We're sitting there at 29 million. That provides lots and lots of cover for the progressive dividend that I think we're pretty well known as Chesnara. That's been supported by a robust balance sheet. Our solvency ratio has remained very strong, above 200%. That gives us lots of support for the dividend, but also importantly gives us significant headroom when we think about things like M&A. We've seen underlying economic value growth of around 20 million. That's before the impact of foreign exchange movements and also the payment of the dividend. And then we've also announced a 3% increase in the dividend, and that means for 20 years in a row we've increased the dividend, and that really is unrivaled in the insurance sector that we operate in.
I mean, talk to us about that strong cash generation. So as you said, 29 million pounds, up from 22 million pounds a year earlier. Is the economic backdrop helping to propel that? Are you able to maintain that momentum?
Yeah, we've certainly seen a bit of help from economics. I think the market overall has been an awful lot more stable than we'd seen in 2022 and some of that very, very extreme volatility. Because a large amount of the books that we have are unit linked, where we take asset management charges on policyholder assets. When you see some positive equity markets, we can find a bit of growth both in economic value and cash over the period. So we've seen some of that coming through. Pleasingly, we've seen all of our divisions contributing positively to the commercial cash generation number, which is a good sign, I think, of the underlying health of the organisation. When we think about second half, look, if we continue to see positive economics coming through, then hopefully we'll continue to see some of that strong cash generation coming through as well. We haven't undertaken any management action, so we've got a bunch of things that we can do as an insurance company that can either add value or accelerate cash generation. So we may have the opportunity to do some of that in the second half of the year, but that 29 million doesn't benefit from any management action. So I think you've seen from us over a long period of time that the cash tends to come through strongly from Chesnara over time, and we've seen that again at the half year.
I mean, looking at operation programs, and this is UK specific, you were working on the introduction of consumer duty for your UK closed books. Could you talk about that a little bit?
Yeah, I mean, it's a very large piece of regulation that's come into the UK. There's been quite a lot of press commentary on it, as well as people have adapted their models right the way across financial services, not just in insurance to this. We've done a huge amount of work historically in this area. There was a long-standing customer review about 10 years ago that set in place some processes and procedures that we have, which we think have helped us ensure that sort of what we do is fit for purpose under this new regulation. But there's still been a very big program of activity to get us ready, and really the requirement for us was to have a fully funded plan that was ready to go and address any areas that we felt needed to be sort of tidied up as part of the regulation. When we were speaking to the market this morning, we were kind of saying, look, that there's no material commercial impact at a group level at this point. We have had a provision in the UK balance sheet that we're using to fund things such as a removal of a small number of remaining exit charges that we have in the book. So that's been a huge amount of work for the UK team, and certainly a big impact on the industry overall in the first half of the year.
I mean, just looking at some of the broker notes, one broker saying balance sheet supports your M&A ambitions, and also that there's compelling consolidation opportunities out there for closed books. Are you seeing any of those, and would you look at expanding even further geographically from the Netherlands and Sweden?
Yeah, it's been a very busy first half of the year for us on the M&A front. So whilst we haven't announced a transaction, the teams have been really busy, and that's a reflection, I think, as you say, of more opportunities coming to the market. And one of the things when we spoke to the analysts that cover the stock this morning that we were we were talking about is historically, I think a lot of people have felt that the closed book opportunity relates to policies that were written 40 or 50 years ago. Actually, what we're now seeing really from large insurance companies is deciding which books are strategic and they'll carry on with and which aren't. And that can mean that there's books of business that were written in the last 5 or 10 years that are actually coming to market. They're on more sort of modern product sets and what have you. And the Canada Life acquisition that we did last year is a good example of that. So for us, that means there's actually an even bigger market opportunity there than certainly I felt was available 3 years ago. And we're in the fortunate position that we've got a strong balance sheet with lots of solvency headroom, which provides capacity to do M&A. We can fund, we believe, M&A up to about 200 million plus immediately off our own balance sheet, and we can then supplement that financing through other sources that are available to us as well. So overall, we feel that's in a good place. We're going to continue to work hard in the second half of the year and see what happens, and the pipeline looks good in the medium term as well.
Well, Steve, I hope you'll keep us posted on any progress with that. Thank you very much for the update today.
Great speaking to you.
And your Chesnara CEO, Steve Murray.